This is Bloomberg Technology. Coming up, tension in the nation's capital as formal talks to reset the trade relationship between Beijing and Washington get off to a rocky start. Why the world's two biggest economies canceled their closing press conference. Plus, SurveyMonkey joins us to talk about the state of tech in an uncertain political and economic environment. CEO Zander Lurie will unveil the company's latest efforts to scale. And some of the top CEOs and emerging minds in tech hold court in Aspen. Our roster of interviews from the annual Fortune Brainstorm Conference in Colorado. First, to our lead. Chinese and U.S. government officials are meeting in Washington for trade talks, but the gathering between the world's two biggest economies got off to a tense start in the morning, and a closing news conference was canceled. Earlier, U.S. Commerce Secretary Wilbur Ross criticized China over the trade imbalance.
China now accounts for nearly 50% of the U.S. goods trade deficit. If this was just the natural product of free market forces, we could understand it, but it's not. And so it is time to rebalance our trade and investment relationship in a more fair, equitable, and reciprocal manner.
Bloomberg's international economics and policy correspondent Michael McKee joins us from the Treasury Department in Washington. So, Mike, tell us what happened. How did the day end like this?
We don't know exactly how the day ended. We believe the talks are over, but the Treasury Department isn't saying anything for right now. And as you mentioned, the news conferences were canceled shortly after the meetings began. We don't know whether to take that as a sign of progress or a lack of progress, because there were the tense comments at the opening ceremony, but no indication that the talks would fail. And we do believe they lasted until the middle of the afternoon. The U.S. would like to see the trade deficit with China come down. They're focused on much of the old economy. They would like to see steel dealt with, overcapacity in steel, and Chinese markets opened to U.S. products. The Chinese would like to see U.S. tech companies sell them more stuff, but the U.S. government prevents that, and so they are trying to negotiate that as part of the deal. So tech, a big part of these talks, but we don't know where they went with them yet.
Mike, managing the relationship with China is an incredibly elaborate dance, and I wonder what your take is on the significance of the Commerce Secretary making such a bold statement.
Well, he may be playing to the political base. Donald Trump came to office promising to slap big tariffs on China and to do away with the unfair trading practices that was costing U.S. jobs. But he hasn't done that. He slapped tariffs on nobody so far, and he certainly backed off his rhetoric with China. Instead, they're talking. But the political base needs a message that they are going to be tough in these negotiations, and that may be what it's all about. The Chinese certainly know what the U.S. goal is.
So we certainly can't understate the importance of the trade relationship between the U.S. and China. What are next steps?
Well, the goal here, and we may still get an announcement to this effect, was to continue these negotiations over the course of a year. When Donald Trump and Xi Jinping met in Mar-a-Lago in April, they set up a 100-day action plan, and there were some deals reached, including some that had been previously negotiated to buy American beef and Chinese chicken parts, those sorts of things going forward, and they'd like to expand that and continue the talks and do some deal-by-deal deal making. We don't know if they have reached that. We didn't expect any particular deal signing today, but we did hope that we would get some sort of announcement about where they go next, and the goal is to keep it going.
All right, Bloomberg's Michael McKee in Washington. Mike, thanks so much for that update. Well, all eyes in Silicon Valley are watching the latest in Washington. Take SurveyMonkey. The polling platform provider is truly global, available in 190 countries, boasting 3 million survey responses worldwide a day. The Silicon Valley-based company recently overhauled its user experience, adding a bevy of new services in an effort to lure more paying business users to its platform. Joining me now to discuss, SurveyMonkey CEO Zander Lurie. Zander, great to have you back here.
Thanks for being
on the show. So as I mentioned, look, a lot of uncertainty in Washington, a lot of uncertainty in the economic environment. What kind of impact do you think this is actually having on tech?
Well, I think tech has a meaningful role. As you look at the tech companies today on the stock market and the amount of financing that tech companies get, the businesses are getting bigger and bigger and becoming more and more relevant. So, for example, with the travel ban the president proposed, that hit us pretty hard as we think about our ability to recruit talent from around the world. And our products are now touching people in countries all over the world, including SurveyMonkey, as you mentioned. So we think it is super important that we have a voice here, that we adhere to our values and stand up for the people that we protect in our employee base and our customers.
You have an interesting perspective on funding because SurveyMonkey has been profitable from the very beginning. Does that make you any more or less interested in all of these goings-on?
Well, we're most interested in how do we grow our business, and we very much believe in profitable, sustainable revenue growth. So what happened this week is we launched our whole new SurveyMonkey platform. We see it as an opportunity to take the voices of the consumers and the employees that you care about and turn that into actionable data. You know, as you know, Emily, we're all swimming in a sea of data. It plays out on social media, people talking about our products and our businesses, and it's those executives who can ask the question why and then use that data to take the actions they need to make their businesses better. And that's where we've been playing for a long time.
You've launched something you call the People-Powered Data Platform,
Yes.
and a new mission around curiosity.
Yes.
Explain this.
So we think curiosity is the currency in business today. Our mission is to power the curious. We believe that you need to be serving the constituents, the customers, employees, and shareholders you care about. And so really what our platform does is we've added all this new features and functionality and solutions to help executives turn those voices into actionable data. And we're seeing this play out in politics, you're seeing it play out in businesses, that people have very different voices depending where you are, what gender you are, what income bracket you're in, what education level you're at. And if you care, if you are asking the questions, if you're curious, those are the people who are executing, they're growing, and they're turning Fortune 500 companies from startups in a quicker time frame than ever. And you're covering the arrogant companies that aren't asking the questions, that aren't listening and being responsive to the market, and they're failing faster than ever.
Now, you folks have said SurveyMonkey doesn't need to go public, especially because of the profitability factor. At the same time, we're seeing Snap and Blue Apron and these new tech IPOs struggling in the public markets. Does that give you any pause in terms of if or when to bring SurveyMonkey to market?
It's a good question. As you mentioned, we've been profitable for a long time. We have a financial profile that is positioning us to go public. We have an institutional shareholder base, and I'm very much a steward of our employee capital. So we do need to deliver a return to our shareholders. We've been operating like a public company with debt holders and adhering to quarterly conference calls with our debt holders. We are positioning ourselves to go public if and when the markets are ready for us. We look very different than some of the companies that have had sustainable losses, and I'm really happy with the way our income statement looks.
Okay, so you guys did a really extensive survey about diversity in
Yes.
tech for the Fortune Brainstorm Conference, which I just returned from, and one of the key findings was a major difference in the perception of the problem between men in tech and women in tech, where women, 66% of them believe there is still a problem, only 38% of men do. Are we living in two different realities?
So I applaud your efforts and those of Jessica Lesson and Rachel from the New York Times. Those women, Katie Bennett from the New York Times, those women who are covering the space and the women who are coming out to speak to the issues. We are living in two different worlds, and the voices that matter are the women who feel affected. So I think it is high time that we take a broader view of what's going on. And company executives like me and others have a real responsibility to make sure that we are putting in place the kinds of policies to not only provide a diverse and inclusive workforce, but also to provide for a comforting and belonging workforce once people get there.
Now, we had a very spirited discussion, and at one point, a gentleman in the audience stood up, a longtime tech veteran, Jonathan Sposato, and he said at the beginning that he knew it was going to be a controversial point, but he suggested that perhaps women need to support each other more. The CEO of OpenTable, Krista Quarles, stood up, and she was, very emotional and had this to say in response.
In Silicon Valley today, there's a sisterhood of women who are supporting each other, telling each other about board opportunities, giving each other business ideas. There's a sisterhood.
We could have talked for hours, so many differing opinions and viewpoints about the state of the problem, what the problem even is. You guys actually broke down a lot of the numbers. What was the most interesting thing that you found?
Well, I think you highlighted it, and it's exacerbated in technology, that when you look at the percentage of women in leadership roles, the percentage of women on board of directors, and it's not just women. You know, we have employee resource groups for African Americans, Latinos, the LGBTQ community at SurveyMonkey. So we think that these groups that are underrepresented in leadership, it has a real impact not only on the products you create and deliver, but how you market them. And so I think executives need to be pushing harder on recruiting, on the employee policies, on the training and mentorship. Parental leave is something that's very important to us. We recently provided men 16 weeks in addition to women, and really it's making sure that women have a support system at home and are not necessarily the ones who are deemed to be the one who have to plan for that early childhood.
You guys have added some new folks to your board, Serena Williams and Intuit's Brad Smith.
Yes.
What do they bring to the table?
Tons. So let's take them in turn. Brad Smith is one of the best CEOs in America by all qualitative and quantitative accounts. He's quintupled the value, the market cap at Intuit, helped them kind of migrate to the cloud and to mobile, and made Intuit one of the best places to work. Serena Williams, we're thrilled to have her be on our team. She's been absolutely dominating her industry and her sport for almost 20 years. Arguably the best female athlete, the best male athlete. I mean, she's the best athlete of all time in our view. And not only that, she's an incredible marketer. If you look at her social media following, if you look at the businesses she's launched in e-commerce, and especially the voice she has on key activist issues that are important to our employees and to our customers around gender pay gap. So we're thrilled to have somebody who's a competitor, who's a winner, and her empathy. She's been a real lightning bolt for our team.
All right, great to hear. Zander, Lurie, CEO of SurveyMonkey, and thanks so much for that data.
Thank you.
It meant a lot. Thanks so much for joining us.
Take care.
A stock we are watching, T-Mobile shares are popping in extended trading. The wireless carrier reported a second quarter revenue of over $10 billion and a strong increase in new subscriber growth. The company also raised its profit outlook for 2017, a move that suggests the promotions and price-cutting tactics aren't hurting the bottom line. Coming up, Qualcomm out with earnings and projects a steep profit decline amid its legal scuffle with Apple. We will dive into the numbers. This is Bloomberg. Qualcomm reporting third quarter earnings with revenue that topped analyst estimates and profit in line with consensus. However, the chip maker forecasts a steep decline in fourth quarter profit that underscores its dependence on Apple. Apple has stopped paying licensing fees to Qualcomm this quarter. Shares dropped as much as 4.3% in extended trading. Joining us now from London to break it all down, Bloomberg's Caroline Hayden. And Caroline, this quarter for Qualcomm is a lot more about lawsuits and legal struggles, but talk to us about the numbers and what they look like given what is going on with Apple.
Yeah, all eyes on the legal disputes with Apple and its manufacturers, and of course the regulatory disputes that span from the EU to the US to Asia as well. And this hit not only the third quarter but also its fourth quarter forecast. So looking at these numbers, they seem to have shocked the market somewhat. Analysts hadn't got their head around how much these legal disputes could in fact cost for the fourth quarter. The third quarter, Qualcomm had guided us there. They said, look, revenue's going to fall, and it did 11%. They said earnings per share is going to fall, and it did 28%. But the fourth quarter forecast, Emily, we are looking at profit that could slump as much as 41%. We are looking at revenue that could fall as much as 13%. This has come as a surprise to the market. The analysts hadn't got their heads wrapped around this sort of amount, and it shows the dependence on Apple, which is refusing to pay the licensing fees along with its manufacturers, as well as, they say, another customer, which they don't name, which is also in a contract dispute. And it's interesting, we're hearing from the CEO in the statement really trying to say, look, we hold, they say, the high ground with regard to the dispute with Apple. They believe they can win the legal cases. Well, check out my chart. It looks as though they don't think that from an analyst and an investor perspective, because shares on the Bloomberg, if you type in #BTV5568, look how much underperforming we've seen Qualcomm going to the chart on the Bloomberg. You'll see in the blue line, we've lost about 13% of the market capitalization this year for Qualcomm. It is the worst performing major stock in terms of chips out there in the US. Meanwhile, look at Apple, up some 30%.
Caroline, stand by a moment. We're just getting in some new headlines about the Congressional Budget Office saying the health care bill repealing the Affordable Health Care Act would reduce deficits by $473 billion by 2026. We're going to continue to monitor these headlines. We're going to bring you somebody from Washington, but I wanted to get you those numbers right away. Caroline, back to Qualcomm, though. Facing stiff competition, as all chip makers are right now. They're making a bid to buy NXP. Talk to us about what that brings to the table in terms of diversifying the portfolio.
It brings it autos. It brings it manufacturing chips. This is why they're willing to splash some $47 billion on NXP. And they still said in the statement out with their earnings today that they hope this deal will be closed by the end of this fiscal year. But there's some concerns around that deal as well because, well, the EU in particular, the regulatory authorities here have been saying they want more information. In fact, they've been threatening to fine Qualcomm if they don't get that sort of information anytime soon. And there was also, well, some activist investors, Elliott Management, for example, saying, we want more money, we want more than $47 billion, please. And so all of this could be a little bit of a misstep. So far, though, the company sounds pretty bullish on the fact they will get NXP in and they will be able to diversify, crucial at a time when the likes of Apple, the likes of Samsung, their two key customers, are actually managing to start making chips themselves.
Speaking of chip makers, another chip maker, a bellwether in the industry, reported on your side of the pond, ASML. They make chip equipment. How did they do?
They did well. They did well. The shares rose in the market today. And they did well because they're saying, look, we are seeing revenue expecting to climb by a quarter, by 25% for this year. They're really managing to push forward with particular deals. Remember, these guys are selling big equipment the size of a bus, Emily, that costs about 100 million euros if you're going for some of the most expensive equipment that they make. They are currently selling to the likes of Samsung is one of their biggest players, TSMC, for example, they sell to them. And at the moment, they are managing to beat. So the profit came in up 32%. We saw revenue up 21%. And also ING analysts really liking the way that they're guiding for the third quarter and the way that they're guiding for the full year. So it does look like it's strength across the board. That's what the CEO told us.
All right, Caroline Hyde in London for us. Caroline, thank you so much. We're continuing to follow these headlines out of the Congressional Budget Office, talking about just how much repealing Obamacare would cost, saying the health bill would, in fact, improve the deficit, reduce the deficit by $473 billion by 2026. We're going to get more reaction from Washington next. This is Bloomberg. A stock we are watching, shares of IBM tumbling 4% in Wednesday trading, hitting a 3-month low, making it the worst performer on the Dow. This after second quarter revenue missed estimates. Sales at its technology services and cloud platforms business fell by just over 5%. Continuing to monitor some breaking news now out of Washington, the Congressional Budget Office issued a statement estimating the Obamacare Repeal Reconciliation Act, saying the health bill would reduce deficits by $473 billion by 2020, but also that the number of uninsured would rise to 32 million people by 2026. Joining us now from Washington, Bloomberg's Kevin Whitelaw. Kevin, what do we know?
Well, this is a estimate of the straight repeal, the delayed straight repeal bill that at this point Senate Republicans say they plan to vote on next week. Now, everything's very in flux after a meeting with the White House. There's some talk of reviving the bill that McConnell had been working on before that would have resulted in an additional 22 million uninsured. But this is looking at a version of a bill that was passed by both chambers and then vetoed by President Obama back in 2015 that would repeal the individual mandate, a bunch of the Obamacare taxes, and a whole bunch of the other things. It actually keeps some Obamacare regulations in place. But so this would, though, if it is passed and then they don't manage to produce a replacement bill within 2 years, when the thing actually would kick in, then you would see an additional 32 million people uninsured. You would see premiums double within a decade. And you'd see potentially up to 3/4 of the country without any options in the individual markets, according to this estimate from the CBO.
So look, Kevin, there are a lot of moving parts here. What are next steps?
Well, right now, we're expecting a number of the Republican holdouts on sort of moving forward with the debate to meet with White House officials at Capitol Hill tonight, so including potentially the Vice President, but definitely the Health and Human Services Secretary, Tom Price, and a few other officials. They're going to be up there for a meeting to try to figure out what the path forward is. Senators said that President Trump made clear in a lunch meeting today with Republican senators that he wants to see them vote on a repeal and replace bill, if at all possible, but he'd settle for a delayed repeal bill like the one the CBO just scored.
Interesting. So, what does this mean for President Trump and the level of confidence? Of course, what happened last week, we know, was a major blow to the Trump agenda.
Well, at this point, we don't really know what was going. We don't really know what's going to happen next week. What we do know is that right now Republicans don't appear to have the votes to get anything yet onto the floor next week. And so if that vote were held right now, we think it would fail. It would get blocked. At that point, we'd have to see what they decide to do. At some point, they might just take a vote, let it fail, and move on to something else. Republicans have a lot of interest in moving on to the tax debate, and they don't necessarily want to get held up debating taxes for weeks and weeks and weeks in additional time. At the same time, they're facing incredible pressure to still deliver on their 7 years of promises to repeal Obamacare.
All right, Kevin Whitelaw in Washington for us. Kevin, thanks so much for that update. Obviously, we'll continue to bring you all any headlines as we have them. Coming up, SoftBank's Vision Fund is making a big bet on vertical farming, investing hundreds of millions of dollars in the startup Plenty. We will hear exclusively from the CEO, Matt Barnard, next. This is Bloomberg.
I'm Elisa Parenti in Washington, and you're watching Bloomberg Technology. Let's start with a check of your first word news. The CBO has released scores for the Senate's straight Obamacare repeal bill. The nonpartisan office says the number of uninsured will increase to 27 million by 2020 and 32 million by 2026. It also says the bill will reduce deficits by $473 billion by 2026. The Russian lawyer at the center of controversy over the meeting with Trump Jr. is offering to testify in the Senate. Natalia Veselnitskaya said she's ready to clarify the situation. The Trump meeting at Trump Tower was reportedly set up to provide incriminating information on Hillary Clinton. A day after British PM Theresa May appealed to ministers to stop plotting against her and each other, Labour leader Jeremy Corbyn is looking to exploit the divide. Corbyn says he sees a cabinet, quote, bickering and backbiting while the British economy weakens. He spoke just before Parliament broke for the summer. In France, the head of the French military, Pierre de Villiers, has quit in a dispute over defense spending. De Villiers openly criticized proposed cutbacks, and President Macron shot back at a reception saying, quote, I am your chief. And a shakeup in Turkey's cabinet. The prime minister replaced or swapped 11 top ministers. Finance Minister Mehmet Şimşek is the only high-level official to keep his job. Global news 24 hours a day, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Elisa Parenti. This is Bloomberg. It's just after 5:30 p.m. Wednesday here in Washington, 7:30 Thursday morning now in Sydney. We are joined by Bloomberg's Paul Allen with a look at the markets. So, Paul, all three of the main benchmarks here in the U.S. reached new record highs by the close.
Yeah, and we're expecting to see a positive session across Asia as well. We've got Nikkei futures just modestly higher at the moment. The BOJ policy meeting wraps up today. We're not expecting any change there. Also in Japan, the June trade balance is expected to show some improvement. ASX futures looking very positive, up better than 0.5% right now as the market waits on production numbers from the oil producers Santos and Woodside. Keep an eye on the Aussie dollar today. It's been pushing ever closer to that 80 cents US mark. We've got the June jobless figures out. That's expected to show a rise to 5.6%, but those are always very unpredictable. One other thing to watch, Hong Kong Composite CPI for June. I'm Paul Allen in Sydney. More from Bloomberg Technology next.
This is Bloomberg Technology. I'm Emily Chang. Back to one of our top stories, Qualcomm's ongoing legal battle with Apple over licensing fees. The latest, Apple and its Asia-based manufacturers are now hitting back at Qualcomm, saying the chipmaker is asking for excessive payments. If successful, Apple says the counterclaims could cost Qualcomm billions of dollars in refunded fees and damages. Meantime, Qualcomm has also filed 2 new patent infringement suits against Apple, but this time in Germany. Joining us now to discuss, Matt Larson, who covers tech litigation with Bloomberg Intelligence. So both sides escalating their case. What does this mean?
Yeah, the case continues to expand. I think it reflects that licensing discussions and kind of behind closed doors in parallel with these legal disputes aren't going well so far. Both sides continue to add pressure by throwing additional legal claims, filing new lawsuits. We saw Qualcomm go to Germany, which is a pretty strict court for enforcing patents. So both sides just ramping up their cases and trying to gain some leverage in licensing talks.
And they're saying there's a threat of blocking iPhone sales in Germany. Could that actually happen?
It can. There are 2 characteristics that come to mind when thinking about German litigation among patent lawyers. The first is that the proceedings are very fast, anywhere from 8 to 12 months from filing through a final decision, which blows away U.S. courts, which are typically 2.5 years. The second is German courts automatically issue injunctions if somebody wins a patent case. So when you win, an injunction issues and products are blocked from sale and import into Germany.
The CEO of Qualcomm, though, has said he's hoping they'll settle. How does that square with the escalation of the legal battle here? Yeah,
they're seemingly contradictory, but they actually all mesh together. I think both Qualcomm and Apple want to reach a deal. Qualcomm has said, as early as today on the earnings call, that they look forward to continuing a supplier relationship with Apple. These are 2 businesses that work together. They want to reach a deal and clear this overhang. But there's a fundamental dispute over licensing practices, how royalties are calculated on the chips that go into Apple and all handset devices. And so it's going to take some time for that to work out, both with legal pressures, potentially in the courts, and in private talks.
Meantime, Qualcomm is also suing Apple manufacturers, including Foxconn. Apple's also weighing in there. What's going on?
Yeah, one of the interesting things about Apple's current deal is the iPhone is made by a series of companies who pay Qualcomm directly. Apple says they entered into bad deals and that Apple in turn is paying them too much because Qualcomm is charging too much. So the contract manufacturers stopped paying Qualcomm royalties on devices that go to Apple. Qualcomm sued them. And basically, Apple has come to the table because that's really a dispute between Apple and Qualcomm. So they've gotten involved in this contract manufacturer suit, and it looks like it's going to be potentially a consolidated litigation between Apple and Qualcomm, where the iPhone makers are on the side, but not necessarily directly involved.
And given that there are so many different lawsuits in different countries, how do you expect this to play out?
In my notes, I put out that I think it's going to resolve via direct licensing agreement. That's what all of this is pointed towards. There's a lot of posturing, but Apple and Qualcomm want to get together and negotiate some kind of deal. Industry trends show that royalty rates are going down for patent owners, but at the same time, I think Apple is asking for a lot in its legal case. So Qualcomm will likely see some kind of reduction in its historic royalty rates, but at the same time, this will resolve. Hopefully soon. We're looking at end of the year is always popular, but likely sometime next year when there's a little bit more clarity into the legal claims.
All right, Matt Larson of Bloomberg Intelligence, thanks for breaking it down. In today's funding board, SoftBank's Vision Fund lent a $114 million investment in a startup that specializes in developing self-driving technology for robots. The startup is called Brain. It's based in San Diego. The investment will be used to further develop AI technology for different types of commercial and consumer robots. Masayoshi Son, chairman and CEO of SoftBank, said Brain is developing, quote, truly groundbreaking technology. That is not the only investment announcement from SoftBank. The Vision Fund is also making a $200 million bet on indoor farms. It is leading the latest investment round for Plenty, a vertical farming startup. Bloomberg Tech's Selena Wang spoke to Plenty CEO Matt Barnard in an exclusive interview from SoftBank about SoftBank in the future of farming.
What we are looking to do is build out our global farm network. So we are launching the deployment of our global farm network to be able to solve for both getting people the best food that's available and to do that all over the planet, make it available everywhere for everyone in everyone's budget. So that's the process that we're looking to kick off with this investment.
So that's a pretty big goal. You want a vertical farm outside of every major metropolitan city around the globe. What's the plan to actually scale and get there? This is something many indoor farms have tried to do but have not succeeded in.
Well, the thing that we've been working for years to do is really to get to the point where we can fit this into everyone's budget. That's the thing that's hardest to do and has been hardest to do. And now that we have accomplished those milestones, we're really looking to scale. So yes, that is the goal. But you know, the thing that is clear and has been clear for years now is that we have maxed out our ability to meet demand on the planet, and so demand has is outstripping supply and has been for a number of years. We are growing plenty of calories on this planet, but not necessarily enough nutrients.
Why is Plenty able to get those prices down so low, competitive with, say, a Walmart, a big grocer? In the past, we've seen the produce coming out of these farms as very expensive.
Yes, and that's been our aim. You know, Walmart is so successful and has been so successful because they work to fit things into everyone's budget, and we have been doing the same so that we can get food to people no matter where they choose to get their food. If they choose to get their food at Whole Foods, if they choose to get their food at Walmart, we want to get great food to everyone, regardless of where they get their food from.
So now Amazon CEO Jeff Bezos, his venture capital fund has invested in Plenty. What do you make of Amazon's acquisition of Whole Foods, and how do you see Plenty potentially playing into this?
Well, if you look at all companies, every team of people around the world that is working to sell fresh produce, fresh food through online distribution channels, it's very, very difficult to do. And one of the things that makes that extremely difficult to do is the fact that what people already know is that buying fresh produce in the store after it's already spent thousands of miles on trucks and in distribution centers, it's a pretty risky gambit. We know that what we don't know is are we going to throw away these strawberries tomorrow or a week from now? Are we going to enjoy them like the ones we got a year ago, or are we going to find them pretty bland and unenjoyable like the ones we got last week? And so we don't know what's going to happen when we can actually see the food in the store when we're there in person. So when it's online and it's someone we don't know picking that produce, it's we don't trust it. That's a very risky buy, and produce is a luxury good. In other words, it costs more per calorie than most things in the grocery store. So people are not inclined really to spend their dollars on something that has a high risk of being thrown away in the next couple days. So anyone, Amazon included, needs credibility in fresh produce, because fresh produce is what drives people to the grocery store.
So what is Plenty's distribution plan then for the rest of this year in the near term? Is Amazon Fresh or Whole Foods in the game plan?
So we, simply yes, but we plan to get food to as many people around this planet as possible, and so clearly, because those are some of the leading retailers in the world, we have been talking to and working with them to make sure that that we get our amazing produce in their stores.
Plenty CEO there, Matt Barnard. Now, out of Washington, thousands of automated vehicles have been approved to hit the road while federal regulators develop safety standards and preempt state rules. A House panel unanimously approved the legislation, which is the U.S. government's first major step towards setting the rules for the self-driving industry. The full House Energy and Commerce Committee could vote on the bill as soon as next week. Coming up, the highs and lows in cryptocurrencies. We dig into what is driving the volatility with blockchain CEO Peter Smith. This is Bloomberg. Cryptocurrencies are keeping investors on their toes with major shifts in Bitcoin and Ethereum over the last few weeks. Last month, in a flash crash on GDAX, the digital currency exchange run by Coinbase, Ethereum's value plunged from $317 to nearly zero. I caught up with blockchain co-founder and CEO Peter Smith at the Fortune Brainstorm Tech Conference in Aspen, Colorado, and started by asking about that crash and how and when cryptocurrencies will stabilize. Take a listen.
In the case of the Ethereum flash crash, this is actually because Coinbase exchange, GDAX, had an improperly implemented matching algorithm. So it had nothing to do with Ethereum, it had to do with poor software quality on GDAX.
Right, but other exchanges have had outages, performance issues. It's not limited to that one situation.
We've seen a few exchanges that have gone down. Our platform hasn't gone down. We've had 999 uptime over the last year. But I think in general, what will happen is we see more and more scaling and more established players come into the system, is that it'll transfer a lot of market pressure onto people to either perform at a high level or, essentially get left behind.
How liquid is the cryptocurrency market?
The cryptocurrency market is incredibly liquid. So most of the trading actually occurs on over-the-counter markets, actually, and those markets are very deep. And then I think on the exchange side, it's pretty deep now as well, too.
Fred Wilson was on the show saying that he thinks that the market cap of Ethereum will surpass the market cap of Bitcoin in short order. What do you think?
I think that's well, it depends on what your definition of short is, I guess.
I believe he said by the end of the year.
I think that's highly unlikely.
Why?
So first of all, Ethereum's had a big pullback. And so we saw that Ethereum really couldn't hold that level. It had gone to, pretty big position, and now it's pulled way back. Ethereum's down 30-40% in the last 2 weeks. I think that, Ethereum could well in the long term surpass Bitcoin's market cap.
Why?
Well, I think that it's a competitive market, and you're seeing Ethereum try a lot of really interesting things. A lot of them are very risky. So I see a lot of scenarios where Ethereum could go to zero. But when you're taking a lot of risk, there's also a lot of upside on that risk. And so I think that Bitcoin's pretty stable, is a pretty safe place in the digital currency ecosystem, whereas Ethereum's kind of a higher upside bet.
We've seen a lot of initial coin offerings recently. Do we need so many cryptocurrencies?
I think that, ICOs and tokens is going to be a huge market someday. But the reality of it, the market today is it's mostly scams. And I think there's quite a lot of securities laws that are being violated by the ICO phenomena right now.
In which cases?
I think I'll leave that for the professionals. But I know on a consumer protection front, and from a, what is our industry doing for consumers, I think it's something to keep a close eye on.
Any tokens or projects that you're excited about?
I'm pretty excited about Ethereum. I'm really excited by what some of the folks are doing at some of the academic research institutions around layer 2 scaling. So I think the folks at Imperial College in London are doing great work. Cornell is doing great work. But in terms of the tokens themselves or the ICOs, I'm very careful not to take a personal view on those.
What is the single biggest obstacle to cryptocurrencies hitting the masses?
I think a lot of it comes down to the strength of the ecosystem. When we see a lot of demand and we have sites go down, that just makes everybody look less than professional. And so I think, one of the key things that the industry needs to do is invest ahead of time so that when we go through these big growth periods, we don't have our infrastructure come crashing down on us.
Okay, so you think it's possible to build a sustainable network infrastructure?
For sure. We have millions of users today, millions of active users today.
So when does it hit the mainstream?
I think it probably already has. There's still a long way to go towards making it more useful. How do we make digital currencies fundamentally useful and useful products? I think that's going to be something that takes 5 to 10 years to figure out. And I think that's
so. I can use Bitcoin and pay at the grocery store, or what do you mean?
In some countries you can. In Japan, I think most grocery stores do accept Bitcoin, which is kind of interesting. It's a recent development. But I think coming back to Fred Wilson, he's probably one of the smarter people in this space, and he sort of routinely says it's people are expecting something to happen in a year, and it's probably more like 10 years. And I think I sympathize with that view. It's going to take a lot longer than people think.
Blockchain co-founder and CEO Peter Smith there. Coming up, it is the network that brought you hits like Mad Men and Breaking Bad. How AMC is competing with the likes of Netflix and Amazon next. This is Bloomberg. Amazon wants you to keep spending, so much so that it's now launched Amazon Spark, a new feature inspired by the likes of Instagram and its use of shoppable photos. Amazon users are able to post stories, ideas, and images of popular products. The goal, to have product inspiration translate into purchases with a click of a button. Amazon Spark is currently only available in the company's mobile app. It is the network that brings you The Walking Dead and Better Call Saul. AMC has had one hit show after another since its first original Mad Men premiered 10 years ago. But it doesn't come easy. I sat down with AMC President Charlie Collier at the Fortune Brainstorm Tech Conference in Aspen, Colorado, and asked how the network competes with streaming services like Netflix and Amazon. Take a listen.
We all compete for talent, right? Talent is at the core of our business. It is, without question, where we all try to pay the most attention. And so they've changed the business because, frankly, the greatest talent is a finite supply, and we all go for it. So when I have someone like Vince Gilligan, who came to us with Breaking Bad, and now he's here with Better Call Saul, we all nurture those relationships, and we all look for the Matthew Weiners, the Vince Gilligans, the Robert Kirkmans. I mean, it's those are the people that fuel our success.
Can you spend as much as they can on a new show or a pilot?
Oh, sure. I mean, what we want to do is spend the right amount. It's not about spending as much as them, but we want to spend the right amount to hit the creative vision. So we look at it and you think The Walking Dead is in the right place and doing the right things. And Mad Men was transformational, and all that happened on AMC, which is great.
So what is the programming budget?
Well, we don't release individual programming budgets, but what is
it billions? I mean, Netflix has billions.
Well, sometimes more is just more. More isn't necessarily better. We talk a lot about doing fewer better. We talk a lot about finding a way to serve the underserved, passionate audience. And if you look, we have a show like Preacher, which we're doing with Seth Rogen and Evan Goldberg. And the risk that is, the creative risk, is as pure as the risk was for Mad Men or Breaking Bad. And that they brought it here and that we nurture it together, that's the best. That has nothing to do with money. That has a lot more to do with their talent.
When it comes to cord cutting and cord shaving, how do you convince pay TV operators to take on a smaller network like a Sundance?
Well, a lot of it is about what I said, is understanding a unique, passionate core audience. What AMC Networks globally has done, we're not 25 channels coming to them and just saying, carry us. We really are 5 specific businesses with 5 target audiences, and we know who we want to be. So have you been to the Sundance Film Festival?
I have not. Okay. I would love to.
Well, the core of the Sundance Film Festival, and it was born out of Robert Redford's vision. He was in our offices last week, and we're still talking about who we want to be, and that's a unique audience and a unique network for the cable operators. So the answer is provide value.
So what do you see as the future of skinny bundles?
Sure, well,
and how it changes the industry, really?
Well, it's interesting. To the consumer, skinny bundle doesn't mean a lot at all. We talk about making sure the fan has from us what they want when they want it, and we've been successful. We're on Sling and YouTube TV, and it's just another way to distribute to the fan where they're going to be. I think what's great about the way we've transitioned our business, we've sort of been disrupting from the inside for a while. Not based on skinny bundles or even some of the competitors you talked about, but more based on the desire to serve the fan and really know the fan better.
Would you ever go direct to consumer?
Well, we just launched AMC Premiere, which is a commercial-free version of AMC, and it's an option for people within the ecosystem. And the strategy behind that was to offer more choices. We do know our fan better than ever before, and one thing they say is, just give me an opportunity to do what I want. And we've been on EST, for example, Apple electronic sell-through for years, the day after commercial-free, and now we've got AMC Premiere, and we could develop to that, and one day, who knows?
So how's it going so far?
It's great. It's been a soft launch, and yet it's been a momentum creator, and those two things together, I feel very good about.
Last question.
Sure.
How do you find your next big hit? How do you figure out what's going to strike at the heart of what people want to watch.
Well, we talked for a minute, and the truth is, and this is not my quote, but nobody knows anything. If anyone knew, they'd just make hits. And so to take the odds and put them in your favor, the best way to do it is bet on talent, bet on great talent, and give them a place to take creative risks and then nurture those risks. And we've had as good a track record as anyone, and I think we will continue to do so.
My conversation there with AMC President Charlie Collier. And that does it for this edition of Bloomberg Technology. We will continue our coverage of tech earnings this Thursday with Microsoft and PayPal on tap. And Bloomberg Technology is live streaming on Twitter. Check us out at Bloomberg Tech TV weekdays, 5 p.m. in New York, 2 p.m. in San Francisco. That is all for now. This is Bloomberg.